there, Mavericks. It is August 13th, 2024. We had a big risk on move. Let's jump into it. In this session, we're going to go over what happened today, some of the news. We've got PPI out of the US. We got some news out of Australia. Anyway, we had some movement, but the big moves were in equities. We had muted moves in both the currency market and the crypto market. But as we do every time, we score everything from +3 to -3, pairing up the strongest versus the weakest, and that tells us where to hunt for the next 24 hours.
Disclaimer. This video was created for professional Forex and crypto traders. Maverick Currencies is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional Forex and currency trader for Maverick, click the apply button in the video description. Let's break down what happened today.
All right, so if we take a look at the news of the day, we had a little bit of news overnight from Australia. Their wages missed by 0.1%. Expectations were for 0.9%, came out at 0.8%. The Aussie sold off just a tiny bit on it, but the Aussie was the third strongest currency of the day. Then we saw the US PPI come in much, much lower than expected. The numbers were supposed to be 0.2. The headline came in at 0.1. The core, which is really what people care about, came in at 0. Now, we've been talking about this. 2 week of inflation numbers will actually start to become negative at some point. And this 0.0 core, when I first saw it, I thought, uh-oh, is the market going to worry about this? Well, guess what? The market answered that question with a resounding no. It is not worried about it. We saw risk assets rally pretty much all day long. So in the currency market, we saw that Kiwi. And we talked about this trade on Sunday, over the weekend in the currency room. We talked about how there really was 2 trades that you could do. You could wait for this rally to fade and then go back to buying yen and Swiss franc, or you could play this as the rally is going to continue. We wanted to be short Swiss franc and yen, and we wanted to be long things like Kiwi, Aussie, and pound. And you can see those were the 3 strongest currencies. The dollar was actually the weakest, and I'm going to pull up a dollar chart here in just a little bit. I think we've got a really decent breakdown on the dollar, and I think we can say for sure that it is now out of that channel it's been in for like the last 4 months. So dollar's starting to look like a much better short. And you can see the CAD was following the dollar. CAD and dollar are correlated right now. So any more weakness in the dollar, probably going to see that in the CAD, but about a half as much. And you can see the pound was up nicely as well. If we go over and check in on the rest of the markets, we've got the S&P, the VT, both up 1.6%. That's a big move in equities. We saw things like the NASDAQ up 2.5%. Crypto was not up as much. So crypto, most of the time, is correlated with the S&P. It is a risk-on asset. We have to take a look at this number and say, that's not a great bounce for crypto when the rest of the markets had a big move. So for me, crypto is still not looking great as a whole. I still continue to like Bitcoin above the rest. And you can see here, the Bitcoin was the best performer for the day, along with Litecoin. Really no follow-through from Bitcoin Cash or Ethereum. So we're just going to stay here on that Bitcoin because it's the only thing that looks decent in the crypto world. Okay, we've had a nice bounce back. And if you take a look at where we are here, just a week ago, we were really in the depths down here. We just had this big sell-off, this big panic. And you can see it has been a pretty orderly, other than one day. There was one day that was sketchy in there. Everything else has been a very orderly, open, close a little bit higher. This day was a pause, gap up, and close at the high. Now this is a very powerful pattern. Gap up and close at the high is telling you that the buyers are there, and they were there all day long, and they were still there at the close. Now look, I don't want to get too far ahead of ourselves because we have a ton of resistance right here. So 54.30 is where we are right now. Really all the way up to 5,500 is going to be this big block. I think we rally up to this level, and I think we have a couple of days of churn in here. So I'm looking at this chart saying, okay, we're now to 0. We're between the moving averages, but I don't think we're going to be bursting through this resistance yet. I think it's going to take a little bit of time, maybe 4 or 5 days, just like it paused here before plunging lower. Maybe we pause here for 4 or 5 days, but I do think ultimately the next move is going to be higher in the S&P. I talked about how even though we had that breakdown, I didn't think we were going to be down there that long. Why? Because the economy is still doing just fine. We do get some more economic numbers overnight, and let's talk about the big one, RBNZ. So I've been liking the Kiwi all week. I've been in a Kiwi Swiss franc long. Here's the problem. I don't want to be in it anymore because we are heading into the RBNZ. So for me, I'm going to be either reducing my position or exiting. I'm going to have to take a look at where I stand here. But if you're trading the Kiwi, be cautious. This is coming in the Asian session when there's not a lot of liquidity. I've seen 200, 250 pip moves off of this. So this is not a report to go into thinking I can hold a big position. We've seen big moves, low liquidity. We really like just to be on the sideline for RBNZ. So I think that's where you want to be. If it acts well after the statement, jump back in it. Jump back in it and stay on the long side. But for me, I'm going to take those trades down. I actually am liking the pound a little bit better here than the Kiwi. My choices were Kiwi number 1, pound number 2, Aussie number 3 this week. And now that Kiwi is going to be off the table, I think this pound looks interesting. We do have CPI coming out tomorrow morning. Same thing here. This isn't going to be as big of a move as RBNZ. Probably good for 30 pips, I guess 30, 40 pip movement around this. And then we have another big report, US CPI. Here are the numbers, looking for 0.2 again, just like our PPI. The big question is, if they're too weak, is that negative? Now, I don't think that's going to scare the market all that much, but we'll have to wait and see. If it comes in around these numbers, if it comes in just like our PPI came in, that's a home run. We should see another very strong risk-on move tomorrow off of that because it definitely means the Fed is going to be cutting rates. Tomorrow night, if you're trading Aussie employment report, just so much news this week. There's going to be lots of good opportunities. So let's go in and take a look at just some of the currencies I'm interested in. We don't have time to take a look at all of them, but let's just go take a look at the ones that are in play. I want to take a look first at Bitcoin. Now, over the last weekend in the currency room, I said that Bitcoin was the only one I'm interested in. The problem is, take a look at where it stands here on the daily chart. It's a nice high base. And it's just pausing right under the 50-day moving average, basically just like the market. We've got some resistance right up here. It's the same thing here. I'm just not really super excited about it. It's a decent setup if we can clear out above this 62,000. Okay, maybe it's looking a little bit better. I just think there's better trades to be had out there. So speaking of better trades to be had out there, I want to pull up a chart on the dollar. And I really want to show you this band that this dollar has broken out of. If we take a look at where we've been in this dollar trade for the last, let's call it 3 or 4 months, every time we came down to the bottom, we bounced, but then you can see we started to push underneath it. And even over the weekend, I said, hey, I'm not convinced yet. I'm not convinced yet this dollar has broken. And sure enough, we got some convincing price action here. I do like the dollar short now. The problem is it the best short out there? And the answer to me is no. I still like Swiss franc and yen as a better short, but I think you can start to look at the dollar as a potential short. On a daily chart, the dollar is the best short out there, but I just think you're going to see a little bit more velocity in Swiss franc and yen to the downside. So the question is, what do we want to be long? Kiwi was the one we wanted to be long. I talked about how we had made higher lows here where the rest of the currencies were just barely bouncing. We had a nice 3-day base. We got a nice breakout to the upside. Look, I am all on board with the Kiwi after the RBNZ report, but until then, I'm going to be on the sideline. So that brings me to one of two currencies, either the pound or the Aussie. Now remember, over the weekend, we came out very clearly, Anka and I, and we both said, you have two choices of a trade here. You have wait for this market rally to bounce up, wait for it to fail, and then get back short yen and Swiss franc. I personally think this market is likely going to go higher, so I don't want to make that trade because that's a risk-off trade. I want to make a risk-on trade, but here's the problem. When you take a look at daily charts, all of the trades that do well in risk-on trades, they're at lows. They had a big sell-off in July, and we said your only other choice is to do a counter trend trade on a daily chart and keep it down to a 4-hour chart. And that's been a really good trade so far. So the question is, what's better between the pound and the Aussie? Well, you know how to do it. You just pair those up. And you can see that right here, right now, over the past 4 to 5 days, it's been the same. So you don't need to really worry about that. Choose one or the other. Just choose one or the other. Remember, you've got pound news tonight in the middle of the night, and then you got Aussie news tomorrow. So if you don't want to play news, then Aussie is definitely going to be your choice, which means I'm looking at things like Aussie Swiss franc. So we talked about this is a bounce off the bottom. If you're going to play it, you got to take a look at this on like a 4-hour chart and say, look, I understand it's counter trend the daily chart, but it's looking really good. This is just a fantastic chart pattern. Just a fantastic high base here. 57.40, this thing is ready to go. That's the high of that base. It's been basing now for a full 24 hours. I think we're ready to release some more energy. So runs up, bases. I think we're ready to release some more energy. You could take a look at pound Swiss franc. Pound Swiss franc looking similar here. Had a big rally. Now it's starting to base. I think this thing is ready to go. And frankly, this thing is probably already cleared out at the top of this range. Yeah. To me, this one is ready to go at 111.18 is where it's at right here, right now. So pound Swiss franc looks good. The other currency I like short here is dollar. So let's take a look at Aussie dollar. Aussie dollar just broke out of some basing, but it hasn't broken out too far. I mean, take a look at it. We consolidated for an entire day, a little bit longer, and we've now had a run of, 6 or 7 hours. This thing still has some room left to go. You could wait for a little bit more of a pullback here. We're getting a little candle here and a pullback, but to me, this one it's ready to go. It's broken out on a 4-hour chart. Take a look at pound dollar. You can see pound dollar has more velocity than Aussie dollar. So for me, whenever I see this, I say, oh, this is the one that has the biggest negative correlation. This is the one I want to play. So for me, I'm more interested in pound dollar here. We just had a big run. Give me a little bit of a pullback or a base, and I will be ready to jump in this one probably around the CPI report tomorrow. So here is where we sit. We like pound, Aussie, and Kiwi on the long side, but remember, we've got that RBNZ. So really for the next 4 or 5 hours until we get that news out of the way, it's just pound and Aussie. Dollar looks the best here. Dollar short looks the best here, followed by Swiss franc, but dollar short looks the best. In conclusion, we talked in the currency room last weekend about how the markets were bouncing off the bottom, and the trade right now is use that 4-hour chart and go long Aussie, Kiwi, pound against things like dollar, Swiss franc, and yen. That is still the trade. Understand the equity markets are moving into an area of resistance. So we do have a little bit more resistance, but we have that US CPI report tomorrow that could push us through that. Personally, I think we got to spend a couple of days in this resistance area, but you know what? The market never listens to me, never listens to my opinion. It just does its own thing. So we do have to be aware of this overhead resistance, but I still think the correct trade to be in is the risk on trade until the market tells us that it has failed. So stick with that trade, understand that it is counter trend on daily, but that is really the only trade to make here in the markets. Thank you so much for joining me. Take care.